Have you ever noticed that the smartest investors buy the most boring deals? When I was younger, I would look at these very successful people and I would wonder, why aren't they doing this and doing that, trying to optimize their returns? Like, why don't they take on more leverage? Or why don't they use preferred equity? Or why don't they do some sort of unique ground lease structure or find some other operational strategy where they can increase NOI, but perhaps to the detriment of the stability of the operations, or it's just more, less efficient for their staff and so on. So all these things that I had in my mind, basically the answer is that they've been there, done that. They're an experienced investor. They've made the mistakes of using too much debt. They've made the mistakes of buying in a bad location, thinking that they could turn the property around while everyone else couldn't, right? So these are examples of where the risk is not worth the reward. And unfortunately, the reality of life, or at least in investing life, is that often the risk is not worth the reward. And so this is something that we look at because we, as real estate investors and owners and operators, we don't shy away from risk. We need to take risk in order to generate return. Nobody in the investment business can generate return without taking risk. So we are specifically seeking risk, but the type of risk that we're seeking is one where we think we can actually get paid commensurately for the risk that we're taking, right? The last thing you want to do is take unnecessary risk that you actually don't see an incremental return for. So when we're evaluating investment opportunities, we're not blind to the risk, and also we're not picking deals that are absent completely of risk. We're just looking for the scenarios where we feel that the risk is appropriately priced.